What's going on, guys? I want to break down the market open for today of February 13th, 2026. There's something that I want to go over with you guys that is very, very important, and a lot of you might know about this, but usually at the market open at 6:30 a.m. PST or 9:30 a.m. EST, the market open, when it opens up, it usually does a false breakout. It goes in the opposite direction first before it actually goes into the direction that it wants to go into. So timing is a big aspect when it comes to trading. I don't focus on it too much nowadays, but if you're trading the market open, I think it's important to look at this. Usually from 6:30 to 6:45 a.m., that's PST, you're going to see this false breakout occur. So I want you guys to notice right here we have the market open right here on this candle. Boom, 6:30 hits. We see a big spike to the downside. Market kind of messes around, but overall for the next couple of minutes, it's pushing to the downside. A lot of people are thinking, oh, it's going to be a nice sell. But what I want you guys to notice is we're going to break in this low, and this low. And we're trying to basically get all the people that have sell stops right here, sell stops right here, sell stops right here. We're trying to activate them into the market. That's what the overall algorithm or market makers, whatever you want to call it, is doing. So there's this massive explosive move to the downside, and a lot of people, they're selling on this, not realizing that that's not the actual move. It actually wants to go long. So I want you guys to notice that you could have just waited for a clear signal, and this is where I would actually plan on executing a trade. When you start seeing massive wicks to the downside like this, that's giving signs of exhaustion. It's like you and me running 2 miles on the track. We're going to probably need like a break to catch our breath if we're running at a very high pace and a high speed. So that's what happens. The market basically burns itself out. We have this big exhaustion wick right here. Then immediately you start seeing green candles. Now most people, they'd be entering on this green candle saying, oh, it's going to go up. And I want to point out to you guys, we have this fair value gap right here. It is a bearish fair value gap right in here. And a lot of people are probably looking at this and they're saying, okay, well, this could be a lower low and this is our lower high. But you need to keep in mind that that false breakout from 6:30 to 6:45 has pretty much already occurred. A lot of people are short in here. They're trapped in shorts and the market's like, oh, we're going to take all your money right now. So one thing that's important to look at is when you start seeing these candles, these bullish candles close outside of the fair value gap like it did right here, that's when you should start looking for longs. You can use this bearish fair value gap is an inversion fair value gap, and now it is going to be basically a bullish fair value gap. This is where your entry is going to be right in here. So on this next candle, you can see price comes into it. It says hello very, very quickly. This is a 1 minute chart right here. Comes in, says, hey guys, what's going on? I'm not coming back to this low. I know you guys think I am, but I'm not. So peace out, guys. Boom, moves away from it very aggressively. This is where you would have entered into the market. You could have your stops right below this candle right here. And then you could have your TP at this high right here, or you could have it at this high or this high. I think this would have been a very good level for you guys to aim for. You can see the market after that, it comes in and moves away, tries to come in one more time, but it can't, struggles for a little bit, and then overall we have this big push right at the 7 a.m. mark. Right here is 7 a.m. coming in, and boom, the market explodes, hitting all three of these highs right here, here, and here, and that's where your trade would have hit take profit on this trade. So I think it's very important that you guys, if you're trading the market open, that you realize that it can be very sketchy, one, but two, there's always that false breakout, and you don't want to get caught in that false move to the downside. Now, does this happen every day? No. This happens pretty damn often though. So you can expect to see this form, and on the downside where it's doing this false breakout, look for fair value gaps. And then once you have identified, hey, this is like the market open, it's false breakout, it's not going to go down, I know it's going to go up, you could then wait for a retrace into that fair value gap, your inversion fair value gap, buy off that or sell depending on how the markets are setting up, and look for previous highs or lows for your take profit. Simply do whatever the market's showing you. But you guys don't want to be rushing into trades. I know a lot of people, once the market belt opens, they're rushing into trades. They're trying to buy and sell. So you guys don't want to do that. You want to be patient. wait for your setup. If there's no setup, there's no trade. It's as simple as that, guys. So hope you guys enjoyed this video. You got some value. I'll see you guys on the next one. Peace out.
Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.